So we've got people all the way from Los Angeles. Who else do we have? We got everyone from everywhere.
Singapore, but yeah.
Hong Kong. So we
And
Singapore.
Tel Aviv.
And New York.
Lovely. And New York. So and I'm in Cyprus, guys. So this should be an interesting talk. I'm just going to quickly introduce you guys just before we start our chat. Eugene is currently the Sales and Business Development Director for Matrix Port. He's had 10 years of experience in institutional trading, and Matrix Port is actually a spin-off of the infamous Bitmain as a digital financial services that did a Series A round valuation of 100 million, which is not small. Travis is the founder and the CIO of Ikigea. Is that? I'm sorry, I'm killing I'm killing the pronunciations. I'm sorry, guys. That's going to happen. And you've also spent 10 years in traditional finance, just like Eugene. And then we also have Roe. Is that how I pronounce it?
Good.
Roe is from Efficient Frontier, which is a crypto algo trading and research company. And they're seeing about 150 million in trading volume every day. And we also have Ryan. There you are, Ryan. We got Ryan, who is the global head of trading at OSL, which is one of Asia's leading digital asset platforms. And they've had a successful raise of 36 million, including a hefty sum from Fidelity. And we've got Michael, last but not least, who is a partner at Block Tower. And they're one of the largest crypto hedge funds, and we don't really need to mention more. I think everybody knows Block Tower very well. So I don't want to start things on a positive, lovely note. I want to start to stir things up. I want to hear about people's like challenges today. I think there was an interesting presentation there by Ilgar. He said we need to move the industry forward. And so how do we do that? What are the challenges that you guys as companies face today? And what do you think you need to do to push that forward? Travis, over to you first.
When you asked the question, the first thing that came to mind was Black Thursday and collateralizing perpetual swaps on BitMEX with BTC and the kind of death spiral that caused. And, the space broadly went into that event very levered. And I think it was kind of the magnitude of that leverage in conjunction with being collateralized in BTC in conjunction with a, DDoS attack on BitMEX that, we can it's probably a separate question, that particular event, but we can put that to the side for now. And I think that, it's still a little too early to call, I think, in terms of whether or not BitMEX's leadership in BTC price discovery was kind of forever tainted or damaged from that event. OI has been creeping back up there, but still remains pretty meaningfully below where it was. And you've seen open interest increase on a number of other competitor exchanges. And it just seems like being able to collateralize in a stable coin or if fiat is, a step in the direction of maturity that this space seems like it's probably ready to take.
So high leverage seems to be one of the issues that needs to be addressed.
Yeah, leverage is one thing. Look, if people are in the mood to 100x, then they should, I guess, be able to do that. This is more specifically in terms of the kind of death spiral situation that BitMEX found itself in as a result of being collateralized in BTC rather than in a stablecoin.
Yeah, so wants to follow up on that.
Yeah, so we actually seen a few exchanges already dip a toe in that regard, and of course they get the spotlight, they get the increase in volume, those open interest levels increase on those certain exchanges, and of course we're well aware of who they are. I think for us, considering that we go down the regulated route here, we're a publicly listed company, we're audited by PwC, we have insurance on all of our wallet infrastructure. So one of our major sort of points of change that we wish to see, I guess, on top of what Travis said, is indeed, just the continued, maturing of the space. Of course, everyone loves retail money. Everyone loves high liquidity. If you want, you plug in those 100x positions if you want. But in the end, for us, it is more so around engaging those counterparts. And I know it's a boring topic that everyone's been talking about for years now. Engaging those more sophisticated institutional counterparts, and sort of helping them the maturation of the space. And how do we do that? We do that by building out world-class infrastructure. We do that by providing professional services, and of course just having the the know-how to operate in that manner that sort of attracts those type of players. And once again, it's been spoken about forever, but indeed it still is that pain point. It still is something that we are constantly seeking and seeking to improve upon, and that is getting those more sophisticated, mature players in the space, and continuing to support that initiative.
Do you think there's a necessity, Ryan, just to quickly follow up on? Do you think it's because we're dealing with a global asset that everyone's picking up and anyone can pick up an exchange, and do you think it's the responsibility of all the key industry players to be able to raise the profile of crypto assets into this kind of professional institutional realm that's not retail money, that's big money? Or do you think it should be completely free market, completely open, and whoever wants it, and whoever doesn't want it, doesn't want it?
Well, I think the latter is what the space was created for, or what this technology that we've all come to love and sort of pray to at night. It was created to give you that option, and of course the sort of migration of it becoming more sophisticated or whatnot is. I know we've spoken about it forever, but it is a little bit of a newer concept, or at least taken more seriously as of late. But I do believe everyone has a choice to make, and we know that the players in the space that do operate in the prior way wind up being the most profitable to date anyway. Just because of the liquidity out there, just because of who they're interacting with, who they're facing off against. That's where the bulk of the volume comes from. That's where the bulk of the liquidity comes from. Retail money is not the smartest money on the street. And indeed, the operators in the space, they get to reap the rewards for that.
I think we just need to get one product right broadly across the industry and then start building out from there. Like, there's a ton of risk that was inherent in one of the most popular products, which was obviously, was the cause of Black Thursday. And I think it'll all weed itself out, right? The professional money understood that you were collateralizing with Bitcoin. There was sort of a, death spiral that Travis mentioned. If you had risk on that exchange, or you were accumulating risk on that exchange, the second you had another exchange get anywhere close with pricing, you would shift risk from there onto a more stable exchange, right? It was just something that I think we all knew to do because we were tracking our liquidation prices, and I think little by little, like, you've seen a lot of volume shift away from BitMEX following that. It's starting to come back. I think open interest got back up to 700 million as of today, but I think over time you'll see kind of people, there'll be shelling points on exchanges where the products are fairly standard, and it's just a matter of platform interaction. People can keep toying around with other products, and that's like throwing out, name your broker throwing out another triple levered vol ETF, right? That only lasts for so long, right? Those are perpetual losers. And I think we as an industry need to focus on some of the more industry standard products that would generate more trading from institutional capital, because in the end, yeah, retail capital is great to be in a market with because it's fairly easy to trade around. But you need the flow of institutional capital to really make it a real market. So yeah, I mean, from the lever product standpoint, that's important. And then kind of switching, in the world of options, I think size and pricing still pretty rough, and getting any decent size is very, very difficult.
Right. Roy, how about you? What are your challenges? What are you facing?
Yeah, I think I'm joining the rest of the guys here on Black Thursday. We've definitely seen a tremendous amount of issues around consistency and responsiveness from the exchanges. So I think the exchanges are definitely experiencing or facing a significant challenge. If you compare it with the traditional markets, the exchanges in crypto are handling like millions of connections on a daily basis. Everybody on the exchange. The lack of brokerage infrastructures and more solid and robust infrastructures in terms of technology and connectivity, that's something that we are taking into our risk management systems consistently. This is something that we definitely take into account. It's definitely a challenge. I think another couple of topics that I think definitely something that we need to push forward is things like cross margin, more liquidity around different exchanges, more streamlined and standardization around terms, fees, structures, the way things work. We are working with quite a few exchanges, and one of the important things for us is to understand how reliable is the exchange during extreme cases. And what we are seeing and facing with challenge sometimes is that everybody's kind of building its own infrastructure and kind of inventing the wheel in some sense. And you have to kind of tailor your solutions and integrations and things like that specifically for each part. So I think, I'm kind of joining the friends here in terms of standardization, more consistency, stronger and faster infrastructure. I was pretty excited to see Igor focus on fast and reliable infrastructures. That's great. I mean, that will help pave the way for the larger institutional money to come in. I mean, we do need, in the end of the day, an effective way to hedge risk, and we need a deep, reliable derivatives markets for that. So that's our take on that.
Thanks, Roy. Eugene, I know you've been sitting there. I think you could have maybe might be a little bit different or maybe the same coming out of Asia. What else do you have?
Well, I think pretty much similar to most of the panel speakers, right? I think the underlying problem is really regulatory clarity. I think there's no real clarity in terms of how we manage collateral, and the product uniformity, industry standards are all sort of mismatched in different places. And that resulted in very dispatched liquidity across different exchanges. And the second problem really is liquidity, right? This isn't a market. We're talking about, a record day of $20 million of ETH options traded yesterday. But this is really a small size, compared to, the big macro funds of the world, right? I mean, so it's still not ready in terms of liquidity. I think there has to be a lot more effort. But having said that, I think that there is a lot of growth in the market. If you look at open interest of derivative options as a pie of the entire open interest of derivatives, that's growing healthily this year, right? And we have CME listed options. We will have regulator options. We will have different types of regulator options. I think those will come, but I think, let's not jump the gun. Let's, be patient with regulations. And I think we will start seeing more industry standard products where I think everyone can participate in a meaningful manner.
Guys, I think this opens up the next question, and I think it's been discussed today on Mainnet, but I think it fits here a little bit more so than anywhere else. and it's about the new fad of going after prime brokerages and mergers and acquisitions of these semi-successful outfits that probably needed a larger balance sheet and were given a lifeline by larger players. How do you see prime brokerages playing into the whole space? And do you think it's going to be a challenge for them? Do you think they will pose a challenge for exchanges, or is it going to be a middle ground sort of thing?
I think, I mean, for us, it just alleviates some counterparty risk, which is a nice benefit. So we're happy. I'm happy to see the explosion of them. A lot of stock for stock transactions. We'll probably continue to see those, but yeah, I mean, for us, it's a net benefit for counterparty exposure.
Ryan, how about you? What do you think?
Yeah, I think that's a good progress in general. I mean, we are seeing some improvement and progress towards more kind of a classical market structure, which is basically taking some parts of the exchange responsibilities. You know, today exchanges in crypto are both the exchange, the broker, the clearinghouse, the bank. It's basically one thing for all, and I think that's. You know, it's bad and good in some senses, but brokers, you know, their focus is on risk management really, and I think that takes some risk. And I'm joining Michael on that front, and we will probably see more brokers in front of the exchanges, so that might, you know, create some kind of a situation in the market where you have you know, more brokers than exchanges, like in traditional markets, which I think is generally a good progress. I mean, we need to have a right balance, but yeah, I think it's a positive progress.
Travis, any thoughts?
I mean, there's the kind of cross-exchange collateralization issue that I think prime brokerage model is supposed to alleviate in a lot of instances. Or that's, well, maybe I'll take a step back and I'll pose a question to the group. What are the advantages that are being pitched in terms of why this space needs prime brokerage? Like what's the answer to that question? Why does this space need prime brokerage?
Does it increase liquidity? Is that another addendum to the question?
It centralizes balance sheets, right? It centralizes asset pools, which deepens liquidity. That's probably the gist of it.
Yeah, but I mean, on the spot side, I guess liquidity is somewhat fractured. I mean, I think liquidity is pooling together naturally in real time. And then when you look at, if you kind of pulled back the curtains on the various different spot, and let's just stick to BTC, spot exchanges and derivatives exchanges, perpetual swap exchanges, the liquidity, it's like 80% of the liquidity, it's a power law, if not stronger than a power law. It's like a dozen or 24 firms are providing some well over 2/3, probably over 75% of the liquidity in the space. And so it's like, if I want to get a really good price, I should just go direct to like Alameda or to Jump. And because if I show up at a whole bunch of other places, they're going to give me the liquidity there anyways, and that exchange is going to take a fee on top of it. And so I understand the not wanting to put a bunch of different collateral on various different places, but what were you doing there in the first place? So now are we talking about providing prime brokerage so I can go shitcoin dumpster diving on KuCoin? Is that what we're talking about? Because that's not a business, right? And so in some ways, it seems like some of this prime brokerage stuff, you're starting to back into, it's like you're almost reversing into decentralized exchanges where people are trying to I'm trying to keep my BTC in cold storage and I want to be able to get a little yield on it while it's sitting there, and I've got a bunch of cash in the bank at Silvergate, and I want a line of credit across, you know, a dozen or half a dozen major exchanges based on the cash that's in there. So and you know, I'm not so in a lot of ways I feel like you are solving for a problem that this ecosystem needs to get a shitload bigger before it's an actual, like, real problem that you can build a business solving. And I've been telling, I love the Genesis guys, and I've been telling them this. We've been talking about prime brokerage for a while with those guys, and I tell them, you guys know you're building a business for an industry that's got to be a lot bigger, and it probably needs to be more than a single asset class too. That would probably help as well too, and I think they're cognizant of that. And I get building for the future, because if this thing all ends up doing what we think it's going to do, this is going to be a big ass space. And, like, I mean, if Genesis gets that business, some bulge bracket's going to pay him a lot of money for that thing in a couple of years, right? I mean, and so I get it in terms of them going in that direction. For the folks that run into this cross margin collateralization issue, so it's like cold storage, borrowing, lending. Okay, that's a couple things. You know, best execution. Okay, we just talked about that. That's supposed to be what else prime brokerage is for. And now you're talking about, like, kind of cross exchange collateralization type of situations. But the big liquidity providers in the space, they've already worked out special deals with all the major exchanges anyways. So they already operate like that in various different ways as is. And so now you're talking about providing those types of cross-margining line of credit type of stuff to, like, you know, a handful of dozens of smaller algo, ARB, market-making type of guys. They're probably questionable credits, and also there's just not nearly enough AUM for you to build a business around that. So I've been a little, you know, I mean, I came from a pretty, you know, traditional background, but, you know, I'll pause there. That was a long rant.
No, that's all right. I think you got it out of your system. Does anyone have a comment on that? Roy?
Yeah, I think, I mean, in terms of, like, building for the future, we do, like, we are trading all day long here. We are kind of an HFT type of, at least part of our operation is. So we do see the need for cross margining and using a better infrastructure and standardization. I mean, we definitely want to try and work with more and more exchanges. The fact that you need to connect to each exchange separately and work it out with them individually in different fronts, I guess, not just technically, but also, you know, term and all the kind of different aspects. I think some buffer between those can help us get better on that. I think again, the fact that the exchange is now handling so much challenges and so many fronts, and now slice it to more specific entities that are focusing on different fronts. One is on the risk, one is the clearing, one is the matching engine. Things like that will definitely get us to a better situation. I mean, so that's part of the benefit I see. I can relate to some of Travis is mentioning here. I do see some risk in that as well, but this is, you know, we need to find the right balance. So I think in the long term is a good progress. We need to see how it plays out in the short term.
Yeah, we have a bit of a question from our. Go for it.
Yeah, sorry, I'll jump in as well. You know, prime brokerage is in our pipeline too. It's part of our game plan. I appreciate what Michael had said, and of course Travis. And I think from a fund perspective, it's pretty important that, you know, players such as ourselves, we listen to the feedback from guys like you. But I think liquidity is secondary, to be honest. And I know we all need it and we all feed off it, and it's essentially our entire business. But counterparty risk is number one. You know, if most of us in this group have been around for 5, 6, 7 years in this space, we've seen multiple blowups. We've seen a lot of scary situations. Granted, most of them have resolved themselves in a funny way, but we sort of forget about that. Everyone moves on. But some of us don't forget about it, of course. People have been burned, of course, in the past. Companies have been destroyed from it. so counterparty risk to the exchanges particularly is number one. To have that safe player sitting in the middle, and granted, Genesis is making a big investment for long term, such as ourselves, and there's pain points that come along with that. You don't win super acute short term business while building for the future, unfortunately. You intend to keep, to have that, that solid player reputation, as the space matures. And this sort of comes into play with what I started off with is, angling for the, the continual maturing of the space, and having the players sort of play along with that idea. We're not quite there yet, although, we are flexing in that way.
Eugene, any thoughts there?
Yeah, I think, like all the panelists, I think there are way too many, prime brokers want to be. I think this is a long-term sort of building mode. But I do see the benefits of having a prime broker model, especially where you have hedge funds who wants to optimize their balance sheet across different exchanges, and they don't want to do it in one single place, and also to reduce the risk that they potentially have with one exchange. And secondly, I think with these prime brokers, most of them are big counterparts with all these different exchanges. They can possibly get better deals for the smaller hedge funds. So there could be some sort of optimization of balance sheet, especially for hedge fund clients. But I don't see, a market as big enough yet. I see maybe one or two players. I think this is probably a 24, 36 more months sort of a journey for the prime broker business to be a bigger business than today. But yeah, these are my thoughts. I think it's the right direction, but a bit too early, in my opinion.
I think we got a good question out of our chat here, and it is from Dima, and it says, "Do the brokers, prime brokers, and clearing houses bring a new kind of risk to the market, or are they here only to reduce them?" So and I do want to mention one thing that I thought was quite of an interesting development in the space, which was Copper's Clear Loop. I don't know if you guys have been aware of that. I thought that was a very interesting product. I'd like to get to that, but let's answer Dima's question first. Michael, any thoughts on that?
I think the intent is to reduce risk. Well, the intent is to be a hub for the industry. I mean, and if you're in kind of on the broker dealer side, that prime broker business is your hub, right? Like that's where you're going to build and establish your business with your counterparties. But yeah, I mean, any extra layer introduces new risk, right? You have to underwrite that counterparty aggressively, and I think we're realizing very quickly that sole counterparties in any service is not a sustainable business model. And so whether it's prime broker, whether it's your custodians, whether it's, obviously, on the trading side as well. But I think there's just a significant undertaking of diligence that's needed to feel comfortable with it, which is worthwhile in the end. And again, like to make it a more sustainable business model, it is something you need to do. But it certainly introduces risk, without question. But as the industry establishes itself, you'll have those stalwart companies, the ones, the Goldman Sachs, the Morgan Stanleys, the big banks of the future crypto industry that, you have to be worried about Goldman turning you down because of your ROA than you turning them down because you don't feel comfortable with the counterparty risk.
Travis, any thoughts on that, on the risk? I know you have a love for prime brokers, so I thought I'd throw this to you.
No, I mean, every business in crypto, if it gets big enough, it becomes systemic, right? So it's like if Coinbase gets hacked really bad, Coinbase is of systemic importance to this space, and you can say that about various other different players. If Alameda Research blows up, they're of systemic importance to this space. So a prime brokerage, you would think, would be the same way, right? So
lovely. I think there's which is a good way to jump into what I mentioned before. What are the best products that you've seen come to market in 2020? Roy?
That's a good question. I think, I mean, we are definitely looking for the options to mature. So we are seeing more and more venues are working on that. We are helping some of the largest players in the market to think about, you know, how to design the risk management systems, the products themselves. So we definitely see some progress in that front. It's still a small market. It's still not, you know, where it should be. And you know, we're working hard to make progress there. It's much more complicated and more sophisticated, so not many have the knowledge to, you know, to just build it. But we are seeing most of the major venues. You see, you know, OKEX, Binance Now, and obviously Deribit and others working on that. So I think this is exciting. Hopefully, we will see some breakthrough in that front within the next, you know, 6 months to 12 months, and looking forward to that. So that's an interesting one.
Ryan, any thoughts on the most exciting product that's come this year?
Most exciting part. I mean, maybe just in a more vague, broad sense, you know, just the further, you know, the next step in the evolution of the derivatives, you know, which is what we're here to talk about as well. You know, I think, you know, Michael said we have to get one thing right first, which I completely agree with, and we sort of haven't done that yet. But you know, maybe the next step, and this is not too sexy either. It's just more products for the institutional guys. So the CME, the backed type listed contracts, you know, widen that up a little bit into different coins. Definitely don't go shitcoin dumpster diving on the CME. Definitely not. But you maybe keep it a little high and tight with ETH and dare I say BCH or any of the more higher volume, let's call it quote unquote majors. I would say that options, of course, been a huge proponent of that since day one. I love to see the outstanding numbers that Eugene noted earlier with Deribit's ETH options. Of course, they're just a speckle out there, but you know, it's promising to see that. But products, like I said, probably I'd like to see the continued maturing of those listed contracts. Although that doesn't necessarily answer your question for what's come out already in 2020.
No.
Halfway through. So,
Eugene, you might have some interesting thoughts on this. Do I understand that you guys also do some structured products yourselves?
Yes, so we were first in the market to launch the dual currency deposit products. I think, as with traditional markets, you know, a lot of these options are being demanded from the structured products, the notes that, you know, they write for their private clients. And I think we were one of the first in the market to launch a dual currency deposit in both Bitcoin and ETH. And we have seen really robust demand, right? Yeah. So, you know, whenever somebody hears options, they get scared away, but we are turning something really complicated, so simple for, you know, retail investors to start looking into this. So I think, you know, one of the biggest driver, I think, product innovation is turning complex instruments like options into really simple products for consumers to dabble into. So we have developed from dual currency deposit products to, you know, 100% principal protected notes to all these different types of structured products that's very bespoke, tailor-made to our clients. And I'm starting to see a lot of demand. A lot of competitors are starting to launch a lot of these very similar products because we see increased demand from the retail base, from family offices, from people who just don't want to understand what the Vega gamma means, right? They don't want to do gamma hedging. They don't want to do, you know, big Bitcoin collateralization in Deribit. They just want to have dollar stablecoin collateralization. We do it for them. So I think that's really important. I think that's the next step for the industry is to make derivatives simple for consumers to invest.
Michael, I think you
talk about hash rate futures. I feel like you would be like the guy probably best. I don't know, like how much interest do you guys have in that?
I guess we speak to a lot of mining counterparts, and I think they really like the whole new product by FTX. I think that's one product that they have been looking at for a long time. So I've been getting phone calls since early last year regarding hash rate futures, and a lot of them wanted to hedge their hash rate. Having said that, you know, the truth of the matter is I think a lot of miners out there are still not entirely sophisticated, right? So I think while it's an innovative product, it's definitely here to stay. but it's still something very foreign to many miners. At least the ones that I speak to, I think there's a big majority of them that wants to learn and they're starting to dip their toes. But I would like to see, maybe a regulator exchange launching a product like that, or maybe increase venues, or maybe another derivative exchange launching more hash rate futures where we increase the liquidity pool, so arbitrage guys can start coming in, providing better liquidity than just one exchange. So I think it's here to stay. I think there's a lot of demand for it. I think there's also education to be done. So I think this is one space that we want to be watching closely.
Does anyone feel that it's a little bit we haven't really solved Bitcoin's problems and we're jumping into hash rate futures? Does this seem like the next try and make a product on Bitcoin because ICOs didn't work?
Maybe it's a land grab. It's a land grab in some way.
Yeah.
Can we just talk a minute about, and I'm definitely not a mining expert at all, like just what the natural two-way flow on hash rate futures would look like in terms of like who would want to buy those and who would want to sell those, and like what I don't know. I'd like somebody that knows more about it than me, I guess.
That's tough. I mean, that's such a concentrated market. I mean,
I think
too, right? So, pure speculation on the other side.
Yeah, I think one of the things that we are constantly being pitched on is new products like that, and I think this is a risky route to take a little bit. Where the liquidity is going to come from, right? So you have to stimulate it with like maybe also sort of rebates or payments or whatever, and it seems to be starting to look a little bit gamey, I would say, in different ways. So I totally agree with you. I mean, for us, it's really about 95% of our activities on Bitcoin, and there's a lot of challenges to sort out there before we jump into to another asset classes, which definitely is important to do, but I think it's a little bit early for that right now.
Yeah, I think between the futures curve and hopefully the Bitcoin options market opening up, there's enough risk management tools for miners that I don't know if hash rate futures would be necessary. It's obviously a different. I mean, it's all some form of risk management or balance sheet management, but I don't know. Again, I think we still need to get the simple things right. Personally, I'd love to see more of that. I mean, one product that I think it's fairly game changing for the hedge, kind of maybe the hedge fund trading side of the world, but the Paradigm, the Paradigm chatbot, right? So that I think was very impactful. It's been impactful for us. I think some iteration of that, I think that's been so successful that I think you'll see a handful more copycats pop up and they'll have their specific partnerships. But I think that was very meaningful, right? Like I think that is, I think that was probably one of the big, and I don't know the specific launch date. I don't know it was 2020 or late 2019, but we've been certainly using it quite a bit more. So that's one that I think, I don't know if it's underappreciated or not spoken about enough, but I think that was fairly meaningful for the industry. But yeah, I mean, we've put on a variance swap in tiny size. It was more of just a test trade with a counterparty that we were, trying to figure out how to do more interesting things with. The reality is we'd love to be able to trade decent size in Bitcoin options, but it really is a very, very effective portfolio management, portfolio construction tool. It provides a lot of capital efficiency that is kind of lacking in this market. It mitigates a ton of gap risk, which we have an enormous amount of. Thankfully, there's a decent amount of mispricings, but it's not a very deep market. So if we can build more interaction, more depth in that market, that would be huge. And again, it's like the simple things. The simple things just need to get better.
Yeah, I think one
So
thing
we've
I
got,
would mention is, sorry, go ahead.
Go ahead, Roy. Go ahead.
I think one thing to mention that is interesting, and I think it's an innovating team, is what we see in things like FTX with the move straddles and this kind of products. So I think these guys are amazing launching new products and pushing them in different ways. So yeah, it comes from in different shape and forms. So yeah, I'm kind of,
Price is going to be very important, though.
Yeah.
Like just putting those on is one thing, but like if you're really like you try and think about whether it's systematic vol selling or you do a lot of work and the market is highly inefficient when it comes to pricing. So that's the other part. It's like, great, even if the debt market depth is there, you wouldn't touch that price with a 10-foot pole if you're really being at all price conscious. Like there's just so that's the tough part. So it's finding size, but also finding size at a price that you deem is reasonable, not even good, reasonable.
Right. Yep.
Okay, I think we've completely annihilated most of the industry in this last 45 minutes. What?
Do we have any more time?
We do have a bit of more time. I wanted to end on a positive note. Travis, you've got to be a little bit more positive, mate. You've killed everything.
No, because I actually I don't have a lot of experience with options in my career. A little bit, but real simple stuff. What is there something inherent about okay, so when BTC gets moving, it's like whatever, 15 times more volatile than the S&P 500, right? And it moves in these like, like Mike said, gap risk, which is I like that euphemism. That's a good one. Is there something about the way that BTC moves, just with how volatile it can get and just the manner in which it happens, that just makes getting a really well functioning options structure around BTC like just really hard? Like it's just very hard to price that type of vol, and like I mean, I don't know, because I know sure as shit like BTC options on Deribit don't act like what I read about in grad school, for example. Or if I'm going to go do something on SPYs, it's just not the same at all. So, and that's a question. I want to ask the question.
You'll see more mispricings on Deribit just because there's more retail orientation around Deribit as an options platform. CME, you're playing with the Rentex, the Two Sigmas, the people that are smart about pricing, trading, arbing vol. So yeah, I mean, you have to kind of just sit back and wait for the right pricing to come in. You have to take a view, like, for example, if you think there's a range in Bitcoin and you want to, getting towards the top end of that range, but if it goes above it, you think it may break out into its next range. Like you may want to reduce spot, and if upside is, I don't know, sub 70 vol, like why not just take that upside gap risk via the derivatives market, the options market, and conserve some capital on your balance sheet, right? Like it's just a more capital efficient way of trading the market. So this is like this again. This is super. Like this isn't anything complicated. You can't do much complicated in this market yet because you just can't. That being said, if we're gonna end up on a positive note, I mean it has gotten better, right? Like you've got more breadth of product. I think you've got more depth, but there's still a long way to go. But I guess there's my positive spin. Things have gotten better.
There you go.
Gotten better.
All right, I think guys, we're kind of running out of time here as we move into the next panel. So I'm gonna just leave you guys with a final thought. So everyone take a bit of a final thought this interesting panel today. Ryan, why don't you go?
Final thought. Okay. Well, actually, first off, Travis, can we see what socks you're wearing today?
I'm in sandals, man. It's 10 o'clock.
All right. Okay. We'll ship you over some new socks. Final thought. I mean, I think, just for the sort of the subject matter of what we're talking about here today, I think this, granted, who could say much about 2020 so far? It's been completely bizarro in every way. But, this was the year for crypto derivatives to sort of emerge. And I know we've gotten a taste, previously over the last few years, and a huge ramp up last year with new players and whatnot, more derivatives that you could shake a stick at, whether we need them or not. But, this year was supposed to be, and I'll probably stick with that, is the continued maturing of the derivatives space in particular. If we zoom in. And some new products coming online, hopefully in a more institutional sense rather than punting on retail. So that's sort of been my outlook for this year. And like I said, things have been derailed a bit for the better part of the year. But yeah, overall, that's my 2 cents as well. Just to end it, for all those attending the panel or viewing, please visit the OSL virtual booth as well.
Hey, Eugene, any final thoughts on today's panel?
Yeah, I think for me, the first point would be, I think, the awakening of smart money, right? I think essentially, guys like Paul Tudor Jones, telling the world that, he's going to start investing in Bitcoin. I think that's removed a lot of career risk for a lot of hedge fund guys. So I've got so many phone calls, from hedge fund guys, ex-counterparts, wanting to take a look into Bitcoin. So I think a lot of smarter money will start coming to the space. I think second thing is that I think volatility will start having to come down a matter of time. I mean, you can't have, if Bitcoin as an asset class or as a currency has to sort of mature, we need to start seeing it trade like CNY or Euro dollar, single digit vol. We're now trading like 70, right? So I think that has to come down. I think third thing is that we're starting to see a lot of, product innovations and tools and platforms emerging. I think that's going to be really helpful for a lot of people to start analyzing the market. So I think 2020 will be the year of growth, the year of awakening for institutions and smart money coming into the market.
Lovely, thank you, Eugene. Travis,
I'll just tell everybody be safe out there. It's
you too, guys.
Just be safe.
Should stay safe and Roy.
Yeah, I think kind of iterating on what I said before, the exchanges I think are working on some very challenging tasks and doing a great job in terms of progress. We are seeing more and more reliable infrastructures, and really derivatives. We've been around for 4 years in crypto, and we've seen quite a bit of the market, different products, different. We've been to market making and liquidity provision, execution engines, algo trading, IEOs, STOs, all this kind of stuff. And I think derivatives is definitely one of the things we recognize as something that has probably the fastest vertical in the growing vertical in the ecosystem right now, and it's good. It's a good reason. I mean, we do need to have a deep, healthy market for derivatives if we want the big players to jump in and be able to effectively hedge their risk. So I think that's definitely something that we'll see growing. I think there's a lot of talent working on this stuff from different angles, and we're happy to be part of the force driving this forward. So that's about it.
Lovely. Thanks, Roy. Michael, any last thoughts?
Yeah. I mean, we made it through March, right? Like that was my biggest risk in this industry from when I first joined, was what happens when we go through an 08 scenario. We cleared it. Obviously, the market structure was stable enough to get us through. And now we're in an environment that's kind of perfect for what we got into this space for. Even Charmine, the head of investment research for Goldman's Private Wealth Group, she even acknowledged Bitcoin, which she would have never done. She didn't say it was an investable asset, but she did say she did pay credence to the volatility and the inherent value in trading it, which I think we're all happy about. But no, the reality is, I mean, this space is going to do more in the next 12 months than it did in the last 5 years. And the infrastructure particularly, I think, is going to bode very well. We're not involved in this space, but there's a ton of VC capital that, you know, they're going to have a blast investing that into the next great few infrastructure companies, and we're all going to benefit from it.
Yeah, lovely, guys. I thank you all for your time today and this panel. I think this was quite fun. I look forward to actually speaking with you guys one-on-one later on some point, because I think Travis, I really want to pick your brain, because I just think you're like you seem pissed off, and feel like I need to help you out. And
I mean, there's like rioting and shit happening outside, so it's like I'm probably a little on edge, to be honest with you.
all right, guys. So stay safe, Travis, out there. Be safe, and guys, we'll stay tuned for the next
Stay
panel.
safe, fellas.